So Greg, take it away. Would love to learn who you are and see your presentation.
Unmuted. All right, now I think you can hear me. Yes, very
Yes,
good.
sir.
Taylor, thanks a bunch to you and Hannah and the whole team at Summit Ventures Studio. I really appreciate the opportunity to present to you guys today. This is exciting for me. I love to share with groups like this, and I hope it'll be somewhat productive for you. I'll try to move through fairly quickly. And hopefully get to some good conversation. Just a little bit about me, and done a lot of things in my life. Been involved in a lot of things. Mostly a technology guy, and have done a lot of software and systems work going all the way back from the earliest stages of my career. I had the good fortune to get connected with a few people back in 2007 who had an idea about doing a startup company to try to solve the dropout problem in the United States. There's 30 million people in the United States who never graduated from high school. And our job and our goal with Graduation Alliance is to try to find those people, re-enroll them, and get them back into high school so that they earn a full high school diploma, not a GED. So it's a full pay-for-performance program. And we've been doing this for quite a long time. We run an accredited online high school. We partner with probably 400 school districts and community colleges around the country. I think in 2009, we had two graduates, two full high school graduates. Last year, we finished 2022 with a little over 4,500 high school graduates around the country. So pretty proud of the work that we've had a chance to do there. And it's been a tremendous ride. I work part-time at Graduation Alliance now, as I was sharing with some folks earlier. I focus these days mostly on information security, but there's not a job I haven't done in the company at GA. And I work part-time now, as the company was acquired by the big private equity firm KKR back a few years ago, and we're off to a whole new trajectory. So in the time I'm not working for them, I also have a small consulting business, which I've decided to call Edupotamus, and I do edtech consulting, process optimization, startup counseling, you name it. If I can help, I'm happy to try to do so. So moving on a little bit. Who the heck is this guy? And do I know what I'm talking about? Maybe. And for those of you who for a certain age group, I'll say in this presentation, you might look at that and laugh. But the reality is I've stepped in a lot of holes in my career. I've done a lot of different things. And if I can help somebody avoid a couple of holes that I've stepped in, I'm happy to try to share my experience and kind of go from there. So might know what I'm talking about here. We will see. And I look forward to questions that come from you folks. The target audience here, and having already met with a couple of colleagues in one of the breakout rooms, who I'd say is probably not the target audience, but I think the target audience for this presentation is if you've got a small business, or you're founding, or you're getting a new startup off the ground, you haven't raised any money before. How do you even go about the process? How do you talk about it? How do you know the language? How do you get prepared to even go through a process where you're going to actually raise financing for a company? So main topics to discuss here today. Let's talk about the why and understand why you're raising. Let's talk about your expertise. Why speed is important. Why asking for help is important. This is a complicated game. Raising money is a complicated thing, and particularly in this environment that we are in right now, it gets more complicated. There have been times in my career where if you could fog a mirror, you could probably get a term sheet from somebody. Now is not that time. The game's complicated, so asking for help and particularly knowing areas that you don't understand and trying to get help in those areas is paramount. And then finally, it's all about being brave. It's all about finding the investor that works for you, not just the investor that gives you a term sheet. So let's first of all kind of talk a little bit about why you might be raising money. The big question that I encourage folks to ask themselves first is whether this is a need or a want. As I mentioned a minute ago, term sheets will not come easily in this current environment. However, there's always savvy investors out there who are looking for very good companies. They're looking for good concepts. They're looking for solutions to hard problems. And they're ready to invest. And it doesn't matter what the current market conditions are. They are ready to invest. You got to remember, particularly in VC land, they have LPs. They have people who give them money to invest. So they got to put that money to work. Sitting on the sidelines is not something that's a real good idea. So first, you need to know and understand why you're raising. Are you growing, but you want to grow faster? That's great. But you really need to know what it is and what your kind of destination, what your goal is. And then really be honest with yourself about this and be honest with your pitch. Look, I'll raise my hand and say, I've been guilty of the hockey stick chart. I'm sure others could probably raise their hands as well. VCs don't want to see hockey sticks, okay? They don't want to see a total, a TAM, total addressable market that's so rosy that how could your business not grow? If you could just get 0.5% of the total addressable market, look how big your company would be, okay? Doesn't matter. You need to be honest with your pitch, and you need to really make sure that the information that you get across to folks is stuff that comes across as being honest and authentic. Nothing turns a VC off faster than kind of a BS pitch, wasting their time, wasting your time. I will have a short plug for a VC that I actually have worked with for many, many years. There's somebody who funded my startup back in the day. But they have a great link that has a whole list of common questions asked by VCs. And I think it's a great resource to go and take a look at. My friends at New Markets Venture Partners, particularly if you're looking at starting an ed tech company, they are very savvy investors in that space. And they were a fantastic partner for us for many, many years. So I'm a big fan of them, but in particular, I'm a big fan of their method and their expertise, because that was something that we needed in particular when we were starting our company. So that's kind of a good lead in into expertise, because at the end of the day, when you start to go in and pitch to VCs and you're attempting to raise money, you've got to go in there with a degree of humility. You're not the smartest person in the room. And I'm saying that to be a little funny, because of course you're very smart and you know your business. But you also know that when you are pitching to a VC, you are trying to sell. They are in some ways your customer. You're trying to get them to buy what it is that you're selling. That customer has to be paramount. That customer has to be right. And you're also pitching in front of a customer who hears 10 to 20 of these things a day. You will see eyes glaze over periodically when you give some of your pitches. You've got to make sure that you've got your information well organized, your pitch tight, and you're ready to do what you need. So you've got some superpowers here. And in particular, you know your business. Okay. It's your job to explain your business to a potential investor like you'd explain it to your grandma. Seriously, if you can explain it to your grandma, you can probably explain it succinctly to a good VC. The goal is not to walk into the room and impress them with jargon and chest puffery. Okay, it's to go in and be able to explain your business easily. You should also know going into that your weaknesses, because you know your weaknesses, right? We all do. I know some of mine. You should know yours. You have them. And while you certainly shouldn't lead with them, you shouldn't shy away from your weaknesses either. Lean into those things and know what those things are. VCs will ask about them. They'll ask where you think the risks are. And there's no bigger turnoff when you're going in to pitch on something than to say, well, no, our business model's solid. We're ready to go. You got to know what your weaknesses are, and you have to be able to convey them in a positive light. Know what you want in an investor and why. Why do you need somebody to invest? Do you need industry expertise? Do you think, know your investor? Do you think your time horizon matches their time horizon? That's a very important concept to understand. VCs invest in funds. Those funds have certain life cycles. And you coming into their life cycle at a certain stage, it is very important to know how those things match up. How well does an investment in your company match up with their life cycle? Do you need mentorship because you know the market somewhat, but you need to know it better? Perhaps they've made investments in another company, another one of their portfolio companies that draw parallels to what you're seeking. Know what you want in that investor and know why you're there. And know as well that you're more passionate about your mission than they're ever going to be. VCs in particular, so again, going back to the target audience for this, if you're just going out for the first time and raising money, let's assume that that's obviously a very early round. Maybe you haven't, maybe you had a little bit of friends and family money that came in, whatever, but you're getting out there for the first time. What VCs want to see is they want to see an exciting, achievable vision. And when you're in those early rounds, maybe you're even pre-revenue, which is also known as I don't have any customers, I'm not making any money yet. Fancy term, pre-revenue, whatever. They're investing in you just as much, if not more than the idea. Eventually, the idea, whatever it is that you're presenting, has to pan out, by the way. They do expect it to pan out. They do expect to get a return on their investment. But early stages, they're investing in you much more than the idea. So be passionate because that's a big superpower of yours. So your job is, with humility but great confidence, convince them that your vision, and if you have them, your results are worth investing in. That's what gets a VC interested and wanting to take the next step. At the end of the day, they're buying your passion for your business in the early stages. That's what they're buying. And eventually, you have to show profit and the value in that. I was just recently reacquainted with an old TED Talk that was given by Simon Sinek. He's one of my favorite kind of go-to folks for inspiration. And if you've never seen some of his TED Talks, I certainly encourage you to do so. But people don't buy what you do; they buy why you do it. I think is a really important mantra, something that means a lot to me. Let's talk a little bit about speed. By the way, Taylor, am I doing okay on time, pace?
Yep, you're good.
Okay, good deal. Thank you. So yes, speaking of which, speed matters. However, at the end of the day, speed requires a ton of preparation and practice. I have to tell you, the first time I pitched for the first round that I raised for my company, it was actually a pitch competition. You had 5 minutes, period. You had to pitch, you were cut off at 5:01. In some ways, that was easier than what I faced in some subsequent rounds of financing. I got lucky with that one. I actually caught some lightning in a bottle. I'll talk a little bit about that in a couple of slides. But you had to be super prepared and super tight to get through a 5-minute pitch. The advantage was that it really gave you the ability when you go out and pitch to others that you can keep things really, really tight. My second round was much more of a grind. I was on the road. I pitched to more than 40 VCs over a very long period of time. This was Zoom wasn't a thing that really existed at that point. So this was literally on the road. I trudged up and down Sand Hill Road like so many others. My data room was a wreck. I wasn't making numbers. It was humbling. It was very humbling. And I got it done and we survived, and I'll tell a little bit about that later. But at the end of the day, you've got to have a real tight pitch. A data room, yeah, you better have one. Even if it's a modest data room, have one. Have a little bit of information that people, when they immediately want to try to follow up, you sign a non-disclosure and you say, yeah, sure. Here's my data room. Here's a little bit of information. Here's a little bit of financial information. Here's some product. Here's a little bit about my team. I just saw a data room. I do a little bit of M&A work for Graduation Alliance. And I just saw a data room that was one of the better ones that I've seen in a long time. And it was short and tight. And it had exactly the information you needed. No more, no less. No document was more than 2 pages long. But it gave me, inside of an hour's worth of diligence, it gave me a really, really good sense of what this company was all about. It was very well prepared. Spend time doing that. You have to spend time doing that, and you have to spend time so that invariably when you get questions from a VC who starts to lean in, who's starting to be interested, you're able to respond quickly. That speed to response is very, very important. At the same time, notice that I said speed matters, not fast matters. Okay. Sometimes slow down. If you slow down a little bit, you can actually go faster. That's where the preparation comes in. That's where having your stuff very well organized and your pitch tight is really pays off the dividends in the long run. You will go faster in closing a round of financing if you spend the time on that preparation up front. Okay. So on to the ask. Some of the asks. Ask for help. First things first. If anybody wants to come off mute and tell me the answer to this joke, what's better than a term sheet? Anyone? Throw it in the chat if you want. Oh, actually, I'm not monitoring the chat. Maybe I should. What's better than a term sheet?
2 term sheets.
2 term sheets. Exactly right. Dale. There you go, Dale. Yeah, a signed term sheet is even better. And 2 signed term sheets. No. More than one is great. And remembering the target audience for this presentation, unless you've done this before, you don't set the terms. Okay, you don't get to walk in a room because you were a rock star. You created a $1 billion valuation company. And therefore you can go out and potentially raise money at the drop of a hat. You're not setting the terms, okay? They're setting the terms. The terms are complicated. They're usually actually pretty fair. If they're not initially fair, that's a red flag, okay? If somebody's not putting a fair term sheet in front of you, that's a red flag. You ought to be asking yourself, is this somebody that I really want to be working with? Because an initial ask, are they trying to take advantage of me? There's always room to negotiate, but if you're new to this, you don't know what you don't know. So first of all, you can't get emotional about it. Don't get insulted by a discounted offer. It's like selling a house. Okay. You might think you know what it's worth, but at the end, the market's going to tell you what it's worth. Then, and if you only have 1 term sheet, you need the capital, You have fewer choices, but you still have choices. Okay. Somebody's lowballing you. You can try to negotiate back. But if the market's telling you what you're worth and you don't like what you're worth, your choice is to sell the house or take the terms or take it off the market. I mean, don't take the terms, but you do have choices. Because term sheets can be very complex, because they can have a lot of vocabulary in them that people aren't familiar with, or they have a lot of vocabulary in them and you slept in a Holiday Inn last night, or you took a course in college that explained how to break down a term sheet. The fact of the matter is, there's a lot of little nuances there. There's a lot of little things that if this certain thing happens, then that certain things happens. There's little triggers that occur within the terms of an offer that you really ought to try to understand. I was drawn to some of the complexities. I think it was Bill Park who did a managing equity presentation for you guys a few months ago. He did a really good job of breaking down a lot of these things. And I, if you haven't seen that one, I'd encourage you to go back and take a look at it. I thought it was super valuable. But at the end of the day, get an experienced advisor, get an attorney, pay the money, okay? Pay the money to have somebody take a look at your term sheet, try to find ways that you could try to negotiate fairly. It is worth the effort. Okay, so at the end of the day, it's all about trying to be brave. It's trying to find the right investor for you. We can talk all day about how your business vision and strategy is perfectly aligned with their investment thesis. Okay, VCs have an investment thesis. Suddenly you guys get together, you give a couple pitches, everybody starts coalescing around all this. But the reality is, as my boss likes to say, says easy, does hard. Okay, it is very hard to match these things. And make no mistake, this is a marriage. You're taking a term sheet and you're signing up, and somebody's going to make an investment in your company. This is a marriage. In my first round of fundraising, as I said before, I got super lucky. First pitch to closing in about 4 months. It was 2009. We were in the midst of a recession. It was an up round. Everybody was happy. It was amazing. Second round, hard. It was a down round. Had to take a down round. We had to take a lot of bad medicine. But the VC understood us, and in the long term, it was right. We understood in hindsight why we needed to take bad medicine. It tasted like crap when we took it. But we stuck to the vision, we stuck to the game plan, and we had a partner with us who was willing to go along for the ride. So again, back to the earlier part, don't be insulted by a lowball offer. Don't be insulted by really hard terms, because sometimes you have to take those hard terms. You know where your vulnerabilities are, you know where your weaknesses are. Take those things and then come together with a partner who's going to help you accelerate. So your gut does matter in this. Listen, but at the same time, really make sure that who you're picking is somebody who believes in you as much as you believe in you. So that's really the net of my presentation. Hope I didn't go too long there. I'm happy to answer questions or kind of get into any other type of dialogue. And again, really appreciate the opportunity to present to you guys today.
Thanks, Greg. That was a great presentation. I took some notes, super helpful. Thanks for sharing this. If you've got questions, you can throw them in the chat or unmute yourself. I put one question in the chat for you, Greg, as you were talking about the superpowers. If I am not great at one or several of those superpowers that you mentioned, what resources would you suggest I go look at? Like you mentioned the new market website. Are there others that you would say have helped you or you've seen help others in generating or creating those superpowers?
Well, yeah, it's a good question. I think the new markets link on their website is really just a list of questions where they try to say, hey, look, these are the types of things. If you come pitch to us, these are the types of questions we're going to ask. And there's, I'm sure there are a ton of other resources that are out there that would have similar lists. But you ought to have at least have answers to those, because they're very reasonable sets of questions. And knowing that you have, quick, concise answers to those things are important. For me personally, my ability to raise money was somewhat, frankly, based on some naivete. I knew technology. I knew how to build really big enterprise systems from my past professional life, but I was mostly a real technology guy. And at the end of the day, when I first started pitching, what I found that really worked for me is just to be authentic and tell that story just like you told it. Like, I would literally stand up to people and be like, "This is my first startup. I don't always know. I'm not sure I know all the vocabulary and all the jargon, but I'm going to tell you why I think this problem that I'm trying to solve with my startup is important. I'm going to try to tell you why I think I have a unique approach to this. And then I'm going to do my best to try to answer your questions." And I think that authenticity got me a lot of audiences. It got me a lot of follow-up. For me, I'm not a big book learner, so I can't say, "Oh, go to this website and you're going to learn all these things." Really, the best thing for me is just getting out there and doing it. Pitch to your family first, then pitch to a group of friends, and join a pitch contest. If there's anything out there where you get an opportunity to participate in any kind of a pitch contest, where you have something, a 2-minute pitch contest, a 5-minute pitch contest, do it. Practice. And then you'll get that confidence. And that confidence is ultimately, I think, what really gets you there.
I have a question.
Sure.
I get a lot of people who are saying, "That's a great idea. Good luck with that." Or "Keep me posted." And so that's kind of good luck with that. Like, I don't see how I can help, or whatever their motivation is to say, "That's a great idea." And then the next most warm response is, "Keep me posted. I really want to see you succeed." Yet then it's taken me, a year to find somebody who says, "I want to go with you on this. I want to mentor you." So what do you do with those people? I mean, I just don't have time to report my day-to-day progress, or, quarterly progress, or whatever, with those people who, "Hey, good luck with that. Keep me posted."
Yeah, it's some of it is velocity in a couple of things. Velocity in terms of picking up the number of different people that you pitch to, but then that's a clear tell when somebody says, "Wow, first of all, a good VC should give you an up or down in terms of a next step pretty quickly. If they don't, they're just dragging you along. You should question whether or not you want to be responsive to that. By the way, it's okay to say, "You know what? I don't think we're a good fit. I'm going to move on." It's okay to do that. Don't feel like you're going to miss out on something because they're stretching it out on you. But at the same time, if a VC gives you a quick down on something and says, "Love the idea, but I don't think this is the right fit for us," then your follow-up question should immediately be, "Do you know anybody else who you think it might be a good fit for?"
That's how I've gotten, somewhat of no. And again, they mostly go into a cul-de-sac to where it's like, okay, they know who I am, they know what the idea is, but they don't have anything for me, and I've answered all their questions. So yeah, I'm moving on. Okay, that helps a lot.
Yeah, and also just try to get the next one, and at the same time also ask them for feedback and just be, "Well, why wasn't it a good fit? Why isn't it a good fit? What did I, can you give me some feedback on my pitch? Is there, or is it just not a good market fit?" If you start hearing over and over and over again that it's not a good market fit, but they can't answer the next question, Like,
As to
it's
why
not
they
a
don't
good
think
market fit. Why?
because.
You gotta try to understand that why. And then if you go pitch to 10 people and they tell you that it's not a good market fit and their why is all roughly the same, maybe you ought to step back and evaluate your business and what it is that they're doing. Because remember, these guys see tons and tons of deal flow. So they may, and you at the same time might feel super passionate about your business and say, fine, I'm gonna find somebody who gets it the way I get it. That's okay, but it's gonna take a lot of at-bats to get there.
Thank you.
Yeah, that's great insight, Greg, there. We've probably got time for one more question if somebody's got it, because it's 11:44. So if you want to unmute yourself, great.
I have a question. So thank you for being here, Greg. My question is, how do you take what do you do with the negative feedback that you do receive in the form of, being rejected as far as investing, or just negative feedback in general? And because you mentioned don't stop, just keep going. If it doesn't feel right with one, then find another one, keep going until you find one that fits right. But at what point do you so if it doesn't feel right or someone rejects you, is there a way to know whether or not that's a result of a flaw in yourself or your business, and that's where you should focus rather than just finding a new person to pitch to? Does that make sense?
Yeah, sure. It does. First of all, I can tell you, Randy, it's not a flaw in you. Okay. So try not to, if you can avoid it, don't try not to look at it that way. It's a lot like matchmaking. It's a lot like trying to find a life partner. It's not quite as serious as a life partner, but in some ways it's more serious than a life partner, right? So you got to take the at bats. You got to keep going out there, and that's why you've got to believe really passionately in what it is that you're doing. You have to be able to describe very succinctly why you've either been successful or why you think you can be successful, and why you can be more successful if they invest in you. And if you do hear over and over again, many, many times, the same objection, and not just the thumbs down, but the same specific objection, we think that this, back to, I think what Harley was asking about with the, if it's a bad market fit or something like that. It also helps probably to have groups like this and to be able to talk to some folks in groups like this and be able to say, hey, I need a group of people I need to practice my pitch on. And I need to practice and see whether or not somebody can point out something for me, because I keep getting turned down and I don't know why. Solicit input from your peers. They don't have to be, you want to pitch to me, drop me a line. I'll listen to what it is that you're doing. And try to tell you whether or not maybe you want to nudge it in this direction, maybe you want to nudge it in that. But you gotta just keep doing it and get in the flow. If you get lots and lots of rejections on something, it does help to do some self-reflection. It helps to step back and say, maybe I need to rethink this business. Maybe I've got great ideas in other areas. That's a legitimate thing too. And it's okay to look at a business that you're starting up and to suddenly say, or not suddenly, but to say, as a result of the feedback you're getting, maybe this isn't the right thing. But more often than not, it probably is. You just got to keep pitching until you find somebody who's going to believe in it.
That's good. Thanks, Greg. I think there's maybe one or two more questions, one in the chat, and then Rob mentioned that he's got a question. Rob, do you want to unmute yourself?
Sure. Thanks, Taylor. Greg, great information. I'm currently in a raise myself. I raised pre-seed about $1 million, and we're in a seed round right now. I raised $1 million with angels. I didn't go the VC route because everyone has told me stay away from the VCs. Can you kind of confirm that with me? Because now is a hard time to raise with angels. They're kind of tight with money. and I know VCs have a ton of money. And I'm just scared to go that route because of all the requirements and all the, just a bunch of maybe some egos that I have to deal with. But yeah, what are your thoughts on that?
Well, that's first of all, congrats on the money that you've raised so far. That's a hard thing to do, and back in the day, I'll go into old guy mode here and say if I had raised $1 million in seed back in 2007, 2008, that would have been a pretty darn big deal, because seed in 2007, 2008 was like you got your uncle to give you 25 grand. So congratulations on that. Don't be afraid of the VCs. They don't. First of all, they put their pants on one leg at a time, just like you do, and their gas smells just as bad as yours. So, get out there and do it. If you've got a good pitch, here's the thing. If you raise seed money, and you raise 10 grand from 25 different people, then that's good, except then you got 25 different people who have 25 different agendas to manage, and to manage their expectations. Now, they might all be friends and family, and they're like, hey, I believe in Robert. It's all cool. Go ahead, man, give it your best shot, which is what should happen in a seed round, because they should be fully prepared to lose that money. VCs would prefer not to lose all the money. But the thing is, you've got sophisticated investors that are out there. Yes, they have a lot of money to put to work, but it's a hard environment too. And they're going to set a high bar in terms of their diligence, a high bar in terms of understanding what it is that they want out of a company. And that's where understanding their time horizon and say, well, where are you? If you were to invest in my company, where are you in your fundraising efforts? Are you in the early stages of your latest fund, or are you at the end stages of your latest fund? Because those are two very different dynamics. When they have to start delivering to their LPs and they have to start delivering profits because they're towards the end of their fund, that might not be a good match for somebody who's coming in and trying to get money right off the street. But it's worth the effort, because you can get somebody who's going to write you a check, for $2 or $3 or $5 million, and you're going to have somebody on your board who has expertise, and you're going to have a good partner that you can work with. I think it's very much worth it.
Got it. Thanks so much. Appreciate it.
You bet.
Great insight, Gregg. Really appreciate it. I think timing wise, we got to close up shop, but thanks for your presentation. I think you put your email and your phone number there. If anybody wants to reach out to Gregg, he's an awesome person to talk to and has so much knowledge. So thanks, Gregg. This was fantastic. We'll have a recording of this up on our site soon, and look forward to seeing everybody next week. I'd encourage you to hit anything at Utah Tech Week that you can. I'm headed over to CMO Zen's pricing class on how to price a product right now. So go check that out. But thanks, everybody.